Hello friends, welcome to this video recordings of IIBF. We continue the BFM Module A International Banking Updates. This is part 2. We have already done part 1 in which we discussed about the non-resident accounts in detail. Since there were a lot of changes in that particular topic, we have done it in detail. Now in this part 2 again, we will be discussing the topic of letter of credit. Now, in the earlier videos which are available, the basics have been explained quite nicely, but this again we are going to discuss in detail the letter of credit, because certain terms or certain things which were left to be discussed, they are being discussed over here now, and certain things have been added like types of LCs and the discussion about parties to LCs in detail we will do, because this is an important topic. So we will be discussing the things which were sort of a little bit less discussed in the earlier session. So let us go start the updates, part 2, and we'll start with the chapter 4 in the book, that is letter of credit. Now, what is a letter of credit? If we see the definition of letter of credit, it is an arrangement under which a bank, on behalf of the buyer, that is the importer, since we are discussing international business, a bank on behalf of the importer, that is the importer's bank. That bank undertakes the payment obligation subject to fulfillment of certain documentary conditions by the exporter. So the importer's bank gives a commitment to pay for the exports subject to compliance of LC terms by the exporter. That is what the meaning of a letter of credit is. Now, let us see, when a letter of credit is issued on behalf of an importer, it means the bank is giving him a credit facility, right? It is a non-fund-based credit facility which is being given to the importer. It is a sort of a working capital finance. Now, whenever bank gives a finance, there is we do for whatever credit limit which is sanctioned by the bank, there is a need to do due diligence of the customer, right? Due diligence of the borrower. So for an importer for whom you are going to sanction a letter of credit limit, we must ensure that the customer is of long standing with proven satisfactory track record. This is what RBI also says, that the importer should preferably be enjoying other fund-based limits with you, and he should be known to the bank and have a good track record. Apart from this, as we do while sanctioning as we normally see while sanctioning the credit limit, the customer's financial standing, line of business, frequency of imports, the sales turnover, is how many, what is he importing the things for? All this should be scrutinized for before sanction of the letter of credit facility, and they should be taken care. Now we go to some other important points which must be kept in mind while sanctioning as well as operating on the letter of credit limit. When we open an LC, when a banker opens an LC, it should be done on the basis of any of these documents, that is either an underlying sales contract, a purchase order which is confirmed by the supplier, or a pro forma invoice from supplier which is duly accepted by the importer. That is, the importer and exporter both should agree to the contract. Or it may be an intent or offer from overseas supplier or by his authorized agent. Now, what is the purpose of taking any of these documents? And when you take this document and you scrutinize, the bank is assured that it is a genuine transaction, because we can open LC only for a genuine transaction. So this is very important, that any of these should be obtained and it should be scrutinized by the banker. And this is the basis of opening LC. Some other checkpoints which are important as far as opening of LC is concerned. The goods and services under letter of credit, when a importer requests for a limit, or when he requests after the limit is sanctioned, when he requests for opening the letter of credit, the banker must ascertain that the goods which are being imported, they are permitted by the foreign trade policy which is in force during that period. Now, according to the foreign trade policies, some goods may be banned, some may be restricted. So, if the goods are restricted, then an import license should be obtained by the importer, which is very necessary. So, the importer, if it is a restricted good, we should ask for an import license from importer. Another important thing is that the credit report on the beneficiary. Now, the beneficiary means the exporter. So the exporter who is going to supply the goods from another country, we have to obtain a credit report. The banker has to obtain a credit report of the exporter before opening the LC. To know about the credibility of the exporter, to know that it is a genuine transaction. All this is very important from the money laundering point of view. So this is another important point which must be taken care of. One more point to be kept in mind is the country of export should be politically and economically stable. The country from which your importer is importing the goods, that should be politically and economically stable, so that no problems come while the transaction is being done. And there are the FEMA guidelines, whichever are in force, they should be complied with. All these points should be kept in mind while opening an LC. Let us look at the parties to LC. Now, LC transaction is a long transaction involving a number of parties. So it is important that we should understand what is the role of each party to LC, and that is why it is being explained here. Because once you understand how many parties are involved, what is the role of each party, the whole cycle of LC becomes clear to whoever is undertaking this transaction. So it is very important that one should understand that which party has what role in the LC cycle. Now let us start. The first party is obviously the importer. He is in LC terminology, the importer is known as the applicant, because he is applying for the LC to the bank, to his banker. So he is the applicant. He is importing goods for which the beneficiary requires. The beneficiary is the exporter. Applicant is the importer, beneficiary is the exporter. Now, there is a contract between applicant and beneficiary about supply of some goods. And normally the LC is open because the beneficiary wants some assurance that the payment of the goods which he is supplying to the importer will be made in time. And that is why the LC is opened. So applicant is the first party, beneficiary second party. The third party, which is very important, is the issuing bank. This obviously will be the applicant's bank, that is the importer's bank, who is issuing the LC on behalf of the importer. That means the bank, as we understood from the definition of the LC, this bank is undertaking a payment commitment under the goods which are imported under the LC, subject to compliance of LC terms by the exporter. So issuing bank is the third important party. Now we come to the fourth party when the LC is opened by the issuing bank. Nowadays, of course, the LC is opened through SWIFT. It is opened electronically. It is not a physical document. It is opened through SWIFT. And after opening the LC, it is transmitted to another bank in the exporter's country, which is known as the advising bank. Now, this bank may be the beneficiary's bank, that is the exporter's bank, or it may be a correspondent bank of the issuing bank. This is agreed between the applicant and the beneficiary before opening the LC, who will be the advising bank. So the opening bank or the issuing bank opens LC and transmits it to advising bank. Now, what is the role of advising bank? Advising bank receives this LC and they advise the beneficiary that the LC has been received and is favored. They hand over the LC to the beneficiary. Uh, this seems to be a very simple job, just passing on the, just telling the beneficiary that LC has been opened in his favor, which has come to the advising bank. But apart from this, advising bank has a responsibility. That is, when they advise this LC to beneficiary, it is understood that they are confirming, they are authenticating the genuineness of the LC. So that is the role of the advising bank, that they confirm the authenticity of the LC, that it is a genuine LC opened by a issuing bank and it is going in favor of the beneficiary. So advising bank has no role in payment of LC, but they have the responsibility of authenticating the genuineness of the LC. We come to the fourth bank, that is the confirming bank. Now, confirmation of LC does not always take place. It may be done sometimes. Now, in this, why is the LC being opened? Because the beneficiary needs some assurance that the payment should be made for the goods which is exporting. And that is why the applicant's banker is opening the LC. Now, suppose the beneficiary is not very satisfied about the applicant's banker, or he does not know the applicant's banker who is in another country well. So he requests that this LC, which has been opened by the issuing bank, should be confirmed by another bank of his choice, maybe his own banker or some bank in his country. When such a request is there, the opening bank or the issuing bank requests another bank to confirm their LC. Now, the confirming bank, what do? When they confirm the LC, it means that they undertake equal responsibility under the LC. In fact, they step into the shoes of issuing bank in the exporters for the exporter. So they are like a issuing bank for the exporter. Exporter will first look for payment from confirming bank, and confirming bank will subsequently reimburse themselves from issuing bank. So that is the role of the confirming bank, very important. But it does not always happen. Confirming bank will come in the picture only if the beneficiary wants some added assurance. So very few LCs may be confirmed, when otherwise it may not be there. We come to the fifth, the next party, that is the negotiating bank. This is the bank who handles the documents under LC. Now, when a LC is opened in favor of beneficiary, normally what is conveyed in the LC is that the beneficiary should first ship the goods in accordance with the terms of the contract before a particular date. First, they should ship the goods, and then they should prepare certain documents. The list of documents is given in the LC. So those documents have to be prepared and submitted to the negotiating bank. So negotiating bank is normally the beneficiary's bank, the exporter's bank, and they handle these documents under the LC. Now, negotiating bank can receive these documents after the shipment is done. They may send these documents to the issuing bank and receive money from them and pass on to the exporter, or they can also grant post-shipment funds to the post-shipment credit to the exporter. The negotiating bank can do two things. One is just collect the funds from reimbursing bank and pass on to the exporter, or they may negotiate these documents. They may purchase the bills and they uh, pay the exporter immediately. They give advance to the exporter against these documents, and then they pass on the documents to the issuing bank and reimburse themselves. Or they get the money from issuing bank and recover the finance which they have given. So that is the job of the negotiating bank. Now, since if they finance against these documents, they will have to scrutinize the documents thoroughly before parting with the money, and then they will certify that the documents are complying with LC terms, and they pass on to the issuing bank. We come to the last bank over here, that is the reimbursing bank. Now, since the exporter and importer are involved, the LC obviously will be in a foreign currency, and the issuing bank, suppose we take an example of an issuing bank who is in India. So the issuing bank is in India, and let us assume that the other bank, that is, the beneficiary is in USA, and issuing bank is an applicant, both are in India. So here the issuing bank would be able, would be dealing in INR with the applicant, but the LC, since the beneficiary is in USA, the LC would be in US dollars. So when the payment of the documents under LC is to be made, the issuing bank will have to take help of a bank in USA. Normally, this is done through a nostro account of the issuing bank. All banks who are dealing in foreign currency, they maintain nostro accounts, that is, accounts in different foreign currencies in the foreign country with some bank. It may be a branch of the same bank, or it may be some correspondent bank. So the bank where the nostro account is held, they will request that bank to reimburse the beneficiary's bank, the negotiating bank, against the claim under the LC. So this bank who is paying the funds towards the goods which are supplied, according to the instructions given by the issuing bank, this bank is known as the reimbursing bank. As I already told you, this reimbursing bank may be a branch of a issuing bank if they have a branch in another country, or it may be a correspondent bank of the issuing bank. So, but they act on as per the instructions of the issuing bank and make the payment for the documents under the LC. So these were the parties under the various parties under LC. So the LC cycle begins when the applicant or the importer submits an LC application to his banker, and the whole cycle goes through all these parties, and it ends when the issuing bank makes payment for these goods which have been supplied under the LC. They hand over the documents duly. Of course, they simultaneously recover the money from the applicant or the importer, and they hand over the documents duly endorsed to the applicant, who then receives the goods against those documents. So that is when the applicant receives the goods, makes payment and receives the goods, that time the cycle ends. This is the LC cycle. I hope you have been able to understand the whole cycle. Now let us go further. We will discuss some types of various types of letter of credit here. There are so many types of letters of credit. I will discuss each one. This was not there in the previous video, so I'm just we are just discussing it, and we'll understand in brief what does each type of LC mean. First one is irrevocable. Actually, all LCs are irrevocable. You have you have heard about the UCPTC in the previous videos. UCPTC is the ICC document which under which all LCs, when we open, we make them subject to UCPTC. Now, if you write in the LC that it is subject to UCPTC, it means the LC is automatically irrevocable. You need not mention also that it is irrevocable. Now, what does this irrevocable mean? It means that it is an absolutely confirmed LC. It cannot be changed, it cannot be amended, it cannot be cancelled without the consent of all parties. That is what irrevocable means. So nobody can unilaterally change this LC. That is the meaning of irrevocable. Now we go to the, and all LCs are generally irrevocable. Nobody opens a revocable LC. And as I mentioned, if you write in the LC that it is subject to UCPTC, it automatically becomes irrevocable. We go to the second type of LC, that is confirmed or unconfirmed. This has already been explained by me while explaining the confirming bank's role. If the beneficiary requests for confirmation, the LC will be confirmed LC, and in that LC, a confirming bank's name will be mentioned. All the rest of the LCs where confirmation is not requested will be unconfirmed LC. Third type, that is restricted or unrestricted LC for negotiation. Now, in certain LCs, while opening the LC, because it has been agreed between the importer and exporter, and the name of a particular bank is mentioned as the negotiating bank or the nominated bank. And documents it is mentioned that the documents should be submitted by the exporter to this particular bank. And such an LC is known as a restricted bank, where they mention the name of a negotiating bank. All the rest of the LCs where no particular bank's name is mentioned, there in the SWIFT field, it is mentioned that the LC is available with any bank in, for example, if the beneficiary is in New York, it will say that the LC is available with any bank in New York. So such an LC is unrestricted LC. Revolving LC, the fourth type. Now, there may be a particular contract in which the shipment of the goods has to be made in many parts. The contract may be for a very big amount and for a big quantity of goods, and it may be mentioned that the shipment can be made in a few parts with different quantities and over a period of time. In such a case, if the between the beneficiary and the applicant, they agree that each part will be shipped after a particular interval, and they inform the bank, and the applicant requests the bank that the LC should be made revolving. In that case, the LC will be open for a smaller amount. And when that one particular cycle of a part shipment gets over, that same amount will be reinstated in the LC. It will be like a cash credit account, so that the applicant's limit is not blocked for the whole contract amount. This is of course the issuing bank's decision, and it may be allowed in case of very good customers, and the LC is made revolving. So LC will be open for a smaller amount. When the cycle is over and one shipment is made and the amount is paid and recovered from the importer, after that the same amount is reinstated in the LC. So one LC runs for a longer amount, but it is and it covers a big shipment, a big amount of, a big quantity of goods, and the contract amount is bigger, but the LC amount is smaller. So each shipment is done and the amount is reinstated. That is what a revolving LC is. We go to the next type of LC, that is transferable or non-transferable. This again is a special type of LC where applicant may, this is of course made transferable at the request of the beneficiary. The beneficiary may be uh, obtaining the goods which he is exporting from some suppliers in his country or from anywhere, and he may request that the LC be made transferable, so part of the LC can be transferred to his supplier, and that is why it is agreed while opening the LC, and the LC is when it is opened, it is mentioned that it is transferable, and at the upon the instructions of the issuing bank, the advising bank will transfer the amount in part to or parts to one or more second beneficiaries. The main beneficiary will be the exporter, but he may instruct to transfer it to some other persons, and those persons will be known as second beneficiaries. Now, when transferable LC can be transferred in a number of parts to a number of second beneficiaries, but the second beneficiary cannot further transfer it to a third beneficiary. That has to be kept in mind. This is done by the advising bank upon instructions received from the issuing bank in the LC itself. LC, it is written, it is a transferable LC. All other normal LCs which are not transferable are non-transferable LCs. We go to the next type of LC, back-to-back. This is a LC which is opened, again the same case where the exporter is taking supply of goods from somebody else, and after that, maybe after processing it, he is exporting it, or he is a trader and he is getting the supply. I mean, he has some suppliers from whom he is buying and selling the goods to the importer. So the exporter will receive a LC in his favor from the importer's bank. He may request his banker to, on the basis of the export LC received by him, he may request his banker to open LC in favor of his suppliers. And if it is done on the basis of the main LC, the export LC, the LC which is opened favoring his supplier is known as a back-to-back LC. The supply of his goods would normally be in his country, so it will be an inland LC for which is opened by that bank. It may be somebody who's supplying from another country also, but if such a LC is open on the basis of another LC received by the exporter, it is known as a back-to-back LC. We go to the next type of LC, that is red claws and green claws. These are, of course, not very prevalent. They are hardly used, but still it is a type of LC. Red clause means an LC where the advising bank, the issuing bank instructs the advising bank to advance some amount along with advising the LC to the beneficiary for the production of the goods to be exported. So for the beneficiary receives not only the advice about the LC, but he may receive some advance amount for producing the goods. The green clause LC is a further extension of this, where apart from the advance for the goods, the warehousing is also taken care of by the issuing bank. I mean, the advising bank advises this to the exporter upon instructions from the issuing bank. Now, why the name red clause and green clause? When the LCs were not being sent by SWIFT, when the LCs were physically sent, these clauses used to be typed in red and green ink, so the name has come red clause and green clause LCs. The last type of LC, that is the standby LC. This LC is, in fact, more of, or not an LC, but it is a guarantee, which is open in the format of LC. So the nature of this is the nature of this LC is more like a guarantee, and it will be paid upon default of the applicant. Only if there is a default, it will be paid. So for uh, it is not a like a normal LC where the goods are supplied, and it may be for other purposes, but it will be standby LC means it is a guarantee, but it is open in the format of a LC. So that is why the name standby LC. Now let us see how an LC is opened, the goods are supplied, and the documents are sent. When the issuing bank receives these documents, what will be done? Now, if documents are received by issuing bank and they are found all right, all the LC terms have been complied with, the LC will be, I mean, the payment has to be made. So if it is a site bill, the LC can be opened for site. It may be a site LC or it may be a usance LC. If it is a site LC, the bills would be drawn DP, that is demand payment. So they are to be, when should they be paid? They are to be crystallized or paid as per individual bank's policy. Earlier, FEDI used to prescribe this period for crystallization of import bills, and it was 10 days after presentation of the bill to the importer. See, because the bill is under LC, the document may be, the importer will go through the documents and he may come and say that I will pay it. But since bank has undertaken payment responsibility, and if documents are complying with LC terms, everything has been complied with by the exporter, bank will have to pay bank is bound to pay the money whether an importer pays or not. So crystallization means the day on which the payment is made and the foreign currency is crystallized into rupees, the amount which is to be recovered from the importer. So for this, individual banks have their own policies, and according to that, it should be crystallized. Normally, the period would not exceed 10 days. If the bill is a usance bill, in this, it is to be paid on the due date, since the date of payment is fixed over there. In this case, the bank sends a advice to the negotiating bank from whom the documents have come, that we are accepting the bills, and we would be paying on such and such due date. Now, when bills are to be retired, either it may be site or usance bill. When bills are to be paid, the foreign currency will have to be converted into rupees for recovery of that. They are to be retired at which rate of exchange? It will be prevailing bill selling rate or a forward contract rate in case a forward contract has been booked for this LC. Especially in case of usance bills, normally the banker advises the importer to book a forward contract. So if a FC has been booked, that rate will be used. Otherwise, the bill will be retired at the prevailing bill selling rate on the day of retirement. Something which is important about handling discrepant documents. Earlier slide we saw that how, if the documents are complying with LC terms, how should you make the payment. Now we will see, suppose the documents are discrepant. They are not complying with LC terms. How this should be handled. If the issuing bank has found that documents, upon scrutiny of documents, they find some discrepancies, obviously they will refuse to pay or they will reject documents. Now this has to be advised to the bank from whom the documents have come, that is the negotiating bank, or it may be confirming bank in some cases. So for this, the issuing bank should give a notice to this effect to the presenter, not later than, this is very important, not later than 5th banking day from receipt of documents. This is as per UCPDC. If the bank fails to send a notice to the presenter before the 5th banking day, from presentation of documents, from the receipt of documents, it will be construed as an acceptance, and the bank would have to pay the money against the document. So it has to be advised by them not later than 5th banking day from receipt of documents. A banking day means a day on which a bank is regularly open. While sending this notice, some more things which need to be taken care of. The description of discrepancies should be very precise. The bank has to be clear in the notice. They have to mention whether they are holding the documents pending. They may, in certain cases, they may put up to the applicant, advise him in the discrepancies, to ask whether he would be willing to accept those discrepancies. In that case, when documents are discrepant, bank is not bound to pay, but applicant may accept those discrepancies and instruct the bank to pay and make the payment. So bank has to advise very clearly to the negotiating bank or the presenter of the document that whether they are holding the documents or whether they are returning the documents. Even if the documents are being returned, the notice has to be sent. So notice has to be clear about status of documents. The description of discrepancy should also be clear, and it should be given in a single notice. The UCPDC guidelines in these cases should be followed.